All right, we're back. We are back. What is going on, chat? Welcome back. Another stream. Little impromptu, even for me. I don't know how ready I am. I'm still actually getting set up on my end. But we're in for a good one tonight, I think. Two things I want to cover tonight. Thing number one is, I think we might finally be at a top here, a short-term top in markets. I had what I thought at least was a really good update today over at for AppliedMMT. If you're a member there, make sure you check out that update. I thought it was a good one, and yeah. I thought it was a good one. I don't know. We'll go over some of the high points today. I really made the case that I think we're finally there. I've thought we've been a little overbought now for the majority of kind of March. I thought we were starting to get to that point, and I thought possibly we kind of churned sideways, maybe even through March, even through April, with April being a little bit bigger risk and May being a little bit bigger risk. But obviously we just really continue to forge much higher in through March and now. But yeah, I think we might finally be there. I think the way I put it in the update is that we're definitely more probable now that the next 200-point move is going to be down to say 5,000 as opposed to 5,400. So I think we're kind of at that juncture now, and I'll kind of make the case right now as to, or at least during this update, as to why. Again, I'm still okay. I got the teleprompter running. Yeah, from everything I can tell, what are you saying? Going to be about 400 billion. Yeah, from everything I can tell, in terms of kind of just the measure of the flow, it will probably be pretty steep. And the thing is with the flow, or I'm sorry, yeah, with markets right now is we had like that January pause for all of 2 weeks, and then we just continue to rip higher. So from October 31st until today. So November, December, January, February, March. I mean, it's 5 straight months with like effectively a 2-week break in that entire 5-week rally. We are overextended. I mean, but it actually hasn't been like a parabolic move, but we're due for a break. And the thing that has been supporting this market more than anything else is the fiscal flow at this point, and that's going to give way here in April. So no surprise that if and when we finally get a pause. All right, if you're watching this on Twitter, I'm pretty sure I'm live on that platform X. Let me make sure that's going live. That looks good. All right, I will close out of that. I don't need that running. Yeah, if you're watching this on Twitter or X, I do have the chat turned off there now, and we're just doing the YouTube side of things. So join me here on YouTube if you want to engage. Obviously, if Twitter's working for you, that is fine. All right, I do want to kick off tonight, or start things off with what I'm seeing in markets. And it really just has to do with the simple fact that it's tax season, and that's a big drain. And oftentimes, I mean, there's 2 time periods each year where markets get particularly soft. It's going to be post the tax drain in April, and then post the corporate tax drain in September, October. And there's that's why oftentimes those are the most volatile periods. It's because that's when we get the biggest drains each year. Real quick, let's just say hi to chat. Danger Zone coming in first. Michael Cruz, man, I haven't seen you in a while, buddy. Glad to see you back. Let's see, is my my little pop-up is working. Yeah, I'm gonna stream when I can stream. Maybe I'll get down to a very consistent Monday, Wednesday, Friday schedule or something like that, but I will pop these things up when I can. Django Geek, welcome back. Ghost on the Half Shell, thanks for dropping in. Let's see, between this and March 15th corporate tax drain, that's about 15% of total bank reserves being drained. Yeah, it's going to be a lot. Hey, Doug, have you noticed that interest on Treasury cracked in the top 4, edging out defense implications for the market. I assume you mean on the monthly. Do you mean from like the monthly Treasury statement? I assume. We'll take a look at that. My office shares a room with my son's room, and he is being extraordinarily loud right now. Normally, I have headphones in to to like hear something else, but right now I'm hearing him. So if I look distracted, it's because someone on the other side of the wall is screaming. I should have the daily Treasury statement or the monthly Treasury statement. Anyway, I might have to yell at him. He's gaming aggressively, must be. All right. What am I looking for? I want to bring up Chrome here. Daily Treasury statement. I'm sorry, monthly Treasury statement. For February. Yeah. Oh, you're talking year to date on the daily Treasury statement. Okay. That's interesting. Oh, I get what you're saying. Okay. Well, do I have the daily Treasury statement pulled up? I don't. Arya, I would imagine, one, welcome. And two, in terms of resources, I think you came to the right resource. My pinned tweet on Twitter has some good resources as well. If you're looking for a place to start. I mean, the other thing too is like some of the old, like the OG conferences on MMT were really good as well. You know what? Let me do this. That's a really good question. I should have the name of the conference. What conference was that? Yeah, okay. There's a conference on Modern Money Network. I'll bring it up. Modern Money Network. This conference right here, I thought was really, really good. I think they give a great intro. If I'm not mistaken, Randy Ray gives a pretty good introduction as well. So if you're looking for like a good MMT 101, some of these guys are not good. It's not that they're not good. They didn't do anything for me, at least. But if you want to know the basics, that's a pretty good place to start. Let me search another thing real quick, and then if you got the basics down, then Randy Ray, was that A-U-R-A? Aura? What's the... Come on, chat, can you guys help me out here? He gave an MMT chat of some sort down in some, like, must have been like a Spanish speaking or not English speaking place. And the Spanish word for, I don't know, money is the name of the, I don't know. Chat, you don't have a clue what I'm talking about. All right. Randy Ray has a good lecture series. I'll try and post it if you want like the next step. You want to know another really good resource is, I think he's in the chat right now, ABCs of MMT. This is really good. If you're like me and it's easier to read stuff or have stuff read to you, this is Michael Cruz's project right here, and it's really good. So he has some books, some resources that he reads out on this, and that is very helpful. So that'd be a good place to start. All right, we were going to look at the daily Treasury statement here, and yeah, good. All right, the point was, I'm sorry, the point was that the interest on the daily Treasury statement. I don't know if the interest on the daily Treasury statement gets. I forget that there's something. I forget how this works, but there's something that you have to account for, or maybe it's just how it eventually gets settled on the daily Treasury statement. Interest on Treasury securities. Higher than unclassified. Higher than Army Corps of Engineers. The entirety of Table 2 is what you're looking at. Interest on Treasury securities and withdrawals on Table 2. Yeah. So this is in millions, right? Rounded to millions. It's a lot of that's a lot of interest on Treasury securities. Defense spending is unclassified. We got Corps of Engineers, which I guess would be domestic defense spending. What other defense spending line items? I mean, I think we knew eventually. Department of Military Payment, Department of Defense Miscellaneous. Okay. So on a specific line item, at least for Department of Defense, we are definitely outpacing it. I mean, we knew that we would eventually reach this point where interest income to the private sector was outpacing almost everything. When we look at the monthly Treasury statement, I guess it's still for February, so we're a couple days out from the March one. Interest income, net interest is the fifth item. Could vary. Oh, but it is above national defense. Yeah, even on the monthly. Yeah. I mean, we're close. We're close to it becoming number 2, above income security. So that's not Social Security. It's exploding. I saw a tweet. I'd have to run the math myself. I saw a tweet, but like if they cut by 1% or something like that, it would reduce the amount of interest over the next year by 400 million, I think. Sorry, 400 billion, which would be a tremendous amount. So that cut is going to be very important when it finally, I'm sorry, not when, if it finally goes through, and if the Fed decides to do it or not. So we'll be keeping an eye on that. All right, I'm gonna catch up on chat here. We will jump back to that screen. Balkanski is way worse, guys. Fed pays also to private sector. I assume you mean the interest. The debt is, oh no, Django, you're gonna get me off on a tangent already. The debt's on an unsustainable path. At this rate, the central bankers will break their fingers, their poor fingers. Do they even have to? Do they have to even key anything in? I mean, wouldn't this stuff just already be automated? Wouldn't most of the keying be automated? Speech to text could solve that problem. 15 billion on the first of the month and about 50 billion every quarter. Yeah, it's a lot. It is a lot. But you guys ignore what pays out to. Are you talking about who gets the interest income? Yeah, so it pays out to bondholders, obviously. It also is now on reserves, which I think I see you popping in chat saying that as well. So my argument is that that ends up passing through to the private sector, and it does so because there's now more money in the private sector. And one of the consequences of raising interest rates is it does make things more expensive. There's no doubt about that. That's actually, I think, the thing we all agree on, is that it makes at least the cost of doing business, getting loans and stuff, more expensive. And that transmits through the entirety of the price structure. And so what ends up happening is you get workers requesting higher wages, right? And that's why you're seeing a very hot labor market right now. Now, it's not a direct transmission directly to workers, but workers are able to ask for higher wages. So they're looking out saying, hey, loans are more expensive, the refrigerator's more expensive, my vacation's more expensive, I need to get a raise. And the money is there, right? It's not like the money isn't there to supply for the demand that is now, for the income increase demand. So it's there to supply, and it gets kind of taken out of the hands of the the top echelon, the top bondholders, and it trickles down. Now, to be very clear, I don't want this, and I don't not want this. I am just explaining how it happens, right? I'm neither for nor against this process. I'm agnostic, at least in terms of policy. I'm just telling you what's actually happening. And so if you're, an MMT hater, and you're like, hey, see, MMT is just printing out tons of money and making things more expensive. I'm just explaining how it happens. I wasn't asking for higher rates. I'm just letting you know what's going to happen when you finally get higher rates. So that is what's taking place. And the other thing I've been on this trumpeting this horn for a while now, beating this drum. I don't know if there's another instrument analogy I can give. But the higher income thing also helps, makes it easier for banks to extend loans, right? Because there's more income. Banks find it more appealing to issue loans when income is higher. All right, Doug, are you buying gold or gold miners? No, I don't. I don't touch gold or gold miners or anything like that anymore. No surprise at all that gold is going higher in this environment, but just not anything I'm going to be chasing. The only speculative thing I've done, and this was I had other reasons for this, is I have some. It hurts to come out of my mouth, but I do have some crypto. So we'll see. Not that I'm banking at it or anything, but and it had nothing. It is, like, in the grand scheme of things, a very little amount. All right, what else do we got? Interest on reserves. Yep. MC, welcome, by the way. And also Darius, I don't know if I've seen you in chat, man. Thanks for dropping by. Do you think the large increase in short duration treasuries versus long duration treasury issuance will ultimately allow for a more expansionary, I'm going to assume, a more expansion in periodic manner? So, MC, I got to be honest. I follow Andy, I forget his last name, and the other guys who really follow all of that. And maybe I'm missing something. Maybe you can explain to me in chat. Maybe you can DM me on Twitter so I can click. But I just don't see it as all that impactful. I don't know. I don't know what I'm missing in that whole discussion. Why some people think it's really impactful. I don't see it. Yeah, it's just gonna have to be explained to me, because I don't get the impact of what what the difference is going to be long term. Is there any significant data on how stocks do on election years? Yeah, I think some people have put together various data out there. I haven't exactly looked at it specifically. All right, what did I want to talk about? We have people strolling on in now, so I think we can get into into the key topics I wanted to discuss. As a reminder, if you are on Twitter watching this, head on over to YouTube if you want to get involved with chat. And if you have a question directly and you want to catch my attention with it, put question, and that will grab my attention. All right, let's do this. I think this is just really the main thing I want to point out. One is that we're going into tax season, and that's important. And I'm going to bring this up here. We're going into tax season, and this is the 90-day average of the flows from the daily Treasury statement. We're overall above where we were at in terms of like the total flow, say let's say from how should I put this, from 2022 to tax season 2023, right? I mean, the flows are at a higher point. We're starting at a higher point in terms of overall flow. So just in that aspect, I think we need to anticipate a higher tax, right? And we're also starting to see bank credit really take off as well. And so it's certainly over the last, I don't know how long, 6 months, bank credit's really been expanding. And we've just been seeing taxes build at a higher level as well. So that's an indicator that bank credit's expanding. So with that in mind, I'm just going to turn off everything else and turn on net deposits and zoom on in and just show that, for example, what peak am I looking for? The January, like just take this for example. I'm highlighting right now the January this year January peak in terms of deposits. So we had a big tax drain at the beginning of the year, and we peak at that point. And if I highlight the same spot back in 2023, now this is the 90-day average of the flow. If I highlight the same spot in 2023, God, 1993, that's a long time ago. We're clearly at a higher level. We're also starting to take off from a higher level from the drawdown in deposits in February. So my anticipation is that we will get a much bigger kick from those tax receipts this year than we did last year, likely on order. And we can see the comparison here over the last few years. Likely going to end up being more in terms of on the monthly whole, the April tax strain of last year, so probably not quite on the level of 2022, but probably more than 2023. And I think we could be anticipating a bit of a break here. And then again, I mean, the other thing to keep in mind too, I guess I could pull up the S&P on this right here. When we had that big tax strain in 2023 last year, we did get a pretty sideways move before the big summer run-up that took place. But we were coming off of a very volatile period and also turning into a very bullish situation to begin with, right? So what I'm saying is we were coming off obviously the big bear run into the end of the year, 2022, and then really turning the corner as we started off in 2023. So we had already had quite a lot of kind of negative sentiment to break through before we got the big run up into summertime. This year, of course, we're coming off of a 5-month rally, effectively straight up. And so my point is, the setup here is a little bit different. And we have to be a little bit cognizant of that the flows being removed might do a little more damage or cause a little more volatility this time around than they did last year per se, even though overall we're in the same kind of economic condition. So I think flows are waning here, and we're just going to be at a spot where markets are going to be particularly brittle, and any volatility really can catch on now, right? We could get into a situation where we get stuck in that reinforced selling, where it's hard to get out of, where you get the dealer hedging kind of working against markets, and in part, it could last for a month and a half, maybe 2 months, because we're not getting that underlying structural flow to kick in to get us out. So, Yeah, I mean, that's kind of where we're. I think that's kind of where we're at. One thing, while I'm over here and while I'm on here, if you head on over to the new AppliedMMT site, Adam's been doing a great job giving this a full overhaul. And you head on over to the data dashboard. If you want an overview of all the tools that are available, he recently filled this out. And it looks really good. So you can get an understanding of the tools that are available if you are an active trader, active investor. Is it past? It is. Ooh. All right. One of the models that I use, the volatility shift model. So what this is doing, I'll explain this and then I'll actually look at it because I'm curious where we finished today. I think it runs at 7 o'clock at night. What this is doing is it's looking at the distribution of, well, it's looking at all the volatility data, right? It's looking at the various volatility features within the market. And what it's saying is given the various outcomes of volatility historically, that, probabilistically speaking, are we more likely to have a high volatility day tomorrow or a low volatility day tomorrow, given where volatility is at, right? And so the hope is that we can anticipate big moves brewing here, but it's not directional, right? I think it's more an understanding that we've had compression and now we're about to see a move from here. And the directionality of the move, you have to understand where the flows are. So right now, we're looking at flow starting to taper off, and now we need to see that kind of high anticipated volatility push through. And we saw yesterday a vol shift predicting for higher volatility. So we're once again in the high volatility prediction. Now, we never realized that volatility today. We actually had a pretty condensed day today. And so what we're looking for is if we get a follow through in selling now. We just haven't had this yet, right? We're realizing the volatility directionally to the upside each time we're having this. We're not realizing it to the downside. We're not getting massive back-to-back lower days at this point. But once we get 2 consecutive sell-off days, or 2 out of 3 in a high volatility prediction scenario, then we can start to guess that the likelihood of volatility kind of catching up, of that reinforced selling regime kicking in, increases in that environment, and we can feel a little bit more comfortable taking necessary, the necessary steps to hedge or do whatever it is you need to do to protect your own portfolio against that sort of volatility. So 2 days in a row now, high volatility prediction here, and so I mean, if we start selling off, we get another day tomorrow selling off. I mean, it could be on. It could absolutely be on, and it could be on until by on I mean selling on until possibly April 19th would be the first kind of pocket. That'd be OpEx would be the first pocket of window of opportunity to reset. But there just wouldn't. I mean, the underlying structural flows just wouldn't be there. So it could last through May if we end up getting selling. So that is kind of how I'm seeing things. Again, head on over to AppliedMMT if you want to see all the tools available. And in all sincerity, I'm going to say this every time. This whole the pro version is built for active traders, active investors, and certainly priced that way. And I don't expect just kind of casual MMT observers to sign up for something like that. It is specifically built out for traders and investors. All right, I'm seeing some more chat roll on in, so I want to say hi to some people. We got Dan, good day from down under. Welcome, Dan. Thanks for joining. Flow should broadly start to weaken into 2026 in my longer term cycle view. I think that makes sense. I think at the very least we should be able to get to 2025 based on the current credit cycle. That would make sense to me. Larry Summers, welcome back, man. MMT stands for more money today. Hey, if you're an applied MMT trader, it means more money today. If you're not, that means, I don't know what you're doing if you're not. Just gambling, I guess. Tech is already getting hit pretty hard. Yeah, it's kind of wild to see what's happening to like Tesla and some of the names. I know like Nvidia finally cooled a bit. But you know what I haven't checked out is what is even the NASDAQ doing? How's the NASDAQ looking? Ooh, you know what it is? You know what is getting hot? I should switch to this. You know what is starting to kick up here? We're starting to see oil kick up, baby. This is the big one. This is the big one. If oil continues to press higher, then we're going to be... There's just no way we get rate cuts if oil starts to press higher. Let's see. Let's see what the Qs are doing here. All right. Just flattening like everything else. All right. Nothing earth-shattering at this point. But yeah, I think we're holding on for dear life here. I really do think that that the next 200 points on the S&P, that is, will likely be to the downside as opposed to the upside. I don't think even when I thought we could be getting to a top in March, I didn't necessarily think that it had to be. But it seems much more probabilistic now. What else do we got? Hamel, man, thanks for joining. I appreciate it. Thanks for saying hi. Glad you could catch things live here. What else do we got? Yeah, energy going crazy. It is. It is. All right. What did I want to look at tonight? I wanted to give my overall thoughts on the market right now, and I kind of promised a few people I'd do that out of the gate. So there's that. I mean, I think flows are slowing. I think this is as good as time as any for a top. And I know I've taken my steps. If you're watching, you're live, you're on YouTube, hit that like button. It would be much appreciated. All right, next up. What do we got? I want to... I'll go. I guess I can go over this for a second. Let's see. We'll go over the tweet. I finally came up with the correct Austrian business cycle. Make countless predictions of the dollar collapse and a market crash, and then complain about deficits and the bubble economy. Step 3 of the cycle is to whine about MMT to get readers to forget about their failed predictions. And then finally, you rinse and repeat and go back to step 1. And I say this on the back of Daniel Lecale. Like, he posted this article again, and it was just funny because I click it. I'm like, I think I've seen this before. And I open it up, and I have. He's been posting this every year for the last 3 years now. So I've definitely read this, and I don't even get what he's saying. These people need to like quote something from MMT. I don't even think he quotes an MMTer in this. He doesn't even source any MMT stuff. So I don't even know how to debunk it, right? Because I mean, I'm not gonna sit here and say, well, that's not exactly what MMT is saying. He's just spouting shit off. So I was gonna engage with this tonight. There's nothing to engage with, and it actually goes on the back of my. He references this article. There have been 27 sovereigns involved in local currency defaults, but I asked on Twitter. I've been asking, and I've yet to get a single response to show me what is unsustainable. Not only define what is unsustainable, but to get a single answer. We went back and forth. I've yet to get a single answer of a country, and there have been some really smart people that have responded. Like Jay Carney I saw, and Professor Plum as well. And I've yet to see a country that fits what I need, because we have to do apples to apples, right? We're in agreement. We're all in agreement here that if you borrow in a currency that's not yours, you're going to inflate your currency when you pay it back in your currency, or when you pay it back by printing your currency to get the currency that you owe, right? That is going to cause inflation. I don't disagree. So you're doing something like that, we're all in agreement. It's unsustainable, but no one can give me an answer. despite my best efforts to get one. So I don't know what these 27 countries are. And when I look at the article that he links, there's not a list. He goes over some methodologies, but there's not a list here. Oh my God, I didn't scroll to the bottom. No, this isn't the list. This is just a list of countries in the database. So I don't know. I'm stumped. There's no country. They can't point to this problem happening. I can point to a lot of problems that make sense to me. I can point to multiple examples of surpluses leading to recessions, because every single one in U.S. history, except for the one that took place in 2020, had a surplus in real terms before it. I guess maybe the 1990 recession didn't, but I can point to examples. I don't know. All right, one of the things I did want to do tonight, we'll give this a shot. We'll see if people hang on or not, or if this is just too boring and no one cares. But what I do want to talk about is some daily Treasury statement stuff, and I want to build out the rest of my tax model. We were going to do this, and I think I'm slightly prepared to finish. So what we need to do is I do need to go over the daily Treasury statement just a little bit tonight, kind of explain what's going on. So to understand this, the daily Treasury statement is kind of like the checkbook, right? It's showing everything that's coming in and going out of the government in terms of spending. Right now, like in my mind, I just kind of consolidate this, and I let it be what it is, and I don't try and overthink it. And there are certainly certain steps that take place that need to be accounted for. But to understand what the heck's going on here is you have withdrawals, which are spending into the public, right? So, they're spending on the USDA, right? Agriculture. They're spending on defense. They're spending on Medicare, right? You're spending on all your line items. You're spending on. And then there's going to be deposits, and deposits are money that is coming back in. The biggest line item by far that makes up 90% of deposits are going to be taxes, right? So withdrawals are money going out, deposits are money coming in. And why this matters is because MMT tells us that when the government spends, it's adding net financial assets to the private sector. And kind of when you look at the daily Treasury statement, it makes complete sense what's happening, right? Like it makes sense. Like the idea of net financial assets being brought into the private sector makes a lot of sense when you're looking at it that way. And so when the government then taxes, it's removing those net financial assets. So you can download this thing right from the fiscal data. If you just Google daily Treasury statement, you can download the entirety. You can get the raw data, the CSV file, or you can look at the daily report if that's your thing and go over it. The main thing I would point out if you're going to start messing around with this is you do have to clean the data a little bit. And I'll give you the one secret, the one problem that everyone runs into when they start piecing together their own kind of daily Treasury statement, their own daily Treasury statement stuff, and that is, if I can find the exact line item, you have to remove. I should have done this ahead of time, so I just had it prepped. You have to remove. Where the hell is it? You gotta remove a cash issuance. Treasury issuance. But why can't I find it? I'll just. Oh, they have it. Look at that. That's nice of them. They have it nicely. Segregated out now on the actual PDF. Yeah. Okay. Public debt cash issuance. and public debt cash redemption. So everything that comes out of table B or table 3B, you got to remove out of that. So that's nice. You know what? They used to have this back when I haven't looked at the actual the actual one in quite a while. So this is a nice update. It makes it a little bit more. Yeah, this actually is a lot easier than when I when I was cutting my teeth on the daily treasury statement. It like makes sense that this is maybe something you shouldn't have. Well, that was nice of them. Anyway, you got to remove that from the data itself. And then also recently, one of the things they did is they started to add, when you download the CSV file, they started to double up the sum. There's like a sum total for each. So that's another thing you got to do as well. So just keep that in mind. Keep that in mind. That give me 1 second. And if you want to play with this, you gotta do that part of it. All right, what are we gonna do? I'm gonna show this again. I know I showed this a lot recently, but we're gonna go to tax. I know I typed it in correctly. Probably spelled receipts wrong. Federal government tax receipts. Got me what I needed. Okay, I've made this point before, but taxes follow the credit cycle. That's just, I'm going to stop there. Oh, this isn't the GDP one. Might be. Well, doesn't matter. We'll put it on a separate axis. Okay. I think this might be to GDP. I think I grabbed the wrong time series. Give me a second. The point I'm trying to make is that taxes show you what's going on in the credit cycle. Okay, that's just the most important thing. And the problem that we have with like H.8 data and other credit data is it can be a little bit misleading as to what's actually going on in terms of the data there. And it's a little bit lagged. And so we want to understand taxes as a whole. So that's what we're looking for. You can see the correlation there. And if we can understand where the tax flows are going, we can understand what's kind of cooking underneath like at the first layer, right? We can get the first indication of what's playing out. So we're going to bring up VS Code here. Now, I'm putting myself out here just a little. I am not a developer. I'm not a coder. I'm a data scientist. So if you're a software engineer, you're a coder by training, just bear with me. It's gonna hurt, but it gets the job done. So in terms of my coding skills, so just let it. Yeah. Whoops. Just gonna have to let it be. I need to. Is it Shift plus or Control plus? All right, we'll zoom in just a little bit on this. So we'll go ahead and run this up. What I did here is I'm actually just importing the CSV files. The CSV file might be a couple weeks old, and this is where I'm removing certain categories that we just talked about, the cash issuance and the subtotals as well. And then I'm making a little pivot table to get it to the in the manner that we need it in. So here's the final pivot table here, and we have our column of deposits that we have. And I showed this the other day. Actually, what I want to do is I want to bring this code above and just show that we can do a 90-day average on what did I must have deleted some oh, I know what I did. I didn't create my 90-day average. This is why This is why doing this stuff live might not be the best, because I'm kind of mentally getting thrown off. What I did is I just hid how many people are watching, and I'm just going to forge through. Maybe this is an entire bore, but I'm just going to forge through. Now we can plot our 90-day average, and this is that chart that we were looking at just a second ago. Of interest here is this big push higher here in 2008 that caused the great financial crisis and really kind of pricked the bubble. You know, and it's one of those things where two things are happening at the same time. You know what's nice, Django Geek? I don't need to learn to code, man. ChatGPT has me covered. So AI is great time to be alive with AI. I don't think I'd put, man, this is the other thing too. Everyone who looks at my stuff, so I have a lot of, man, you guys are already dogging me. The packages will be used later on down the line. People talk about like package bloat, but it never impacts anything I'm doing. I don't know. I've never ran into these issues, but must be people who learned how to code when you only had like 8 kilobits of RAM or something like that. You know? Speaking of which, just as a tangent too, I've had some issues with some of my RAM chips. And it was so I'm down to 32 gigs as opposed to my normal 64. I got to get those swapped out. You need at least 3 gigs more taken out before one line is written. ChatGPT can lead down the wrong path. You need to know how to interpret results. So My overall thought with ChatGPT and using like Copilot is, granted, I will never be a software developer and I will never come up with like really ingenious code, right? But for me, I need, you know, the code is a tool. It's a means to an end, right? In the end is building the tools necessary to model out my understanding of macroeconomics in a data science and machine learning sort of way. So that is, it's kind of what the importance is. That's why ChatGPT is helpful. And I've really found, the other thing too that I've really found as well is the explain this feature in Copilot. Explain this has been really helpful. So I for the most part, I know what's going on when I see it. I don't think I could, it would just take me so long from scratch to do everything. The other thing too is, if you use ChatGPT right, you can have it walk you through what it's doing and kind of reinterpret in its own words what it's doing for you. All right, we're going to go ahead and start running these. So what I want to, so here's the problem that I ran into, right? Is I had this moving average of deposits. This is good enough. It lets you understand the trend and it lets you understand the various cycles and kind of where they peak. But where this was really faltering is I tried to do like some percent change over a year. It just gets too chaotic. It gets too noisy, and it's not what I'm looking for. What I'm looking for is something like this, right? I'm looking for something like effectively what it is that we're actually tracking with credit. I've seen Buffo a few times on Twitter do like a month-to-month thing. So that's what I'm going to try and crack here. I'm going to try and crack that code, is to do a month-to-month thing. So we're going to rearrange the pivot table. Oh no, we're going to double check that the record date is a date is a date object. We're going to group by year and month. So what I'm trying to do is do a monthly comparison of the two. So we'll see if this ends up group by year and month, target deposit sum for each month. So hopefully that's what we wanted. Monthly deposits, October. Oh yeah. This is what we wanted. This is what we wanted. Let's do this. Create a bar chart of monthly deposits. I don't think this is going to be what I want. We'll see. Yeah, this is showing where each month of each year is shown. Thank you, Hamel. I'm so sorry. I am so sorry, chat. Thank you. All right, to back up, I ran the record date code. I ran the pivot to, or the group to group it by year and month. And then we ran a new table that groups by year and month. And then we have our final table here, the monthly deposits, that shows each month and the total deposits for that month. And now I want to create a bar chart of the monthly deposits where each month of each year is shown separately. This is doing it. Oh yeah, that's what we're looking for. And now we'll come in and we'll say, can you only show from 2019 to today? Go ahead and hit accept. We'll oh, that's not what I wanted to do. No, I didn't want to accept that. But start in 2019. All right. I'm going to go back to this. What I'm going to do to get around this is drop all rows where year is greater than is before 2019. Which I think that's what the code was trying to do in the first place, but there's no way. Is that 2019? There's no way. That doesn't look right. I mean, pivot. Oh, that's because I'm pulling from the pivot table, not from monthly deposits here. I probably have no viewers left at this point, but yeah, there we go. There we go. All right. And now I'm going to do, can you color each year a unique color? All right, I'm getting an error, so I'm going to pop this in to ChatGPT, and here is some code. Here is the error. Oh, I need to copy the error. We'll put that into ChatGPT. I'm sure this is something funny. And Joshua, are you a developer? Yeah, maybe I'm doing myself a disservice here. I do some web stuff. Wow, ChatGPT gave me a massive block of code, so we're going to retry this. I think I don't like coding during we'll just give this a run here and see if this is happy, because it wanted numpy. So we will import np as, whoops. Yeah, that it was yelling at me for that. So there's no way color equals year. I'm getting this error. So it just removed it. I guess it doesn't really matter. No, I think I just broke it all. So let's do this. Let's roll this back. We know we need monthly deposits. We'll just restart and go down. Let's see. Have I lost every viewer? Maybe. No. Okay, we're still getting some viewers. You know what's really dumb is, all right, so we're good there. I guess we could have put that back at the top. All right, so we're gonna go back to yeah, that would make each color red though, wouldn't it, Hamel? I'm just gonna pop this back into ChatGPT and tell it to fix it for me, because it's smarter than I am. All right, here is my code. I'd like to make the bar chart colors based on the year. So each year has the same color, but each unique year has a different color than the ones next to it. Yeah, so my idea is just to offset each year of color, right? That's kind of the intention, because then it'll pop a little bit more. All right, ChatGPT is giving some promising results here. Very, very promising results, I think. So we're gonna actually run this above. We're gonna define some variables here. Oh, we're going to jump back to saying some stuff is deprecated, but we don't care. All right, we'll run this part here. Not what I wanted. All right, this combined each month. Not what I wanted. All right. We're going to go back, and we're going to go, that's not exactly what I wanted. I need to show a bar for each month of each year. And then the colors for each year remain separate. I've uploaded a picture of what I have right now for you to compare with. Each bar for each unique year should be the same color, but the color should change based on the year. All right. It should be happy. We'll see. We'll see what this kicks out. Oh yeah, Hamel. That's exactly why I'm doing this. Listen, I could just code this perfectly, but when I explain it to ChatGPT, it allows you guys to learn along with me. All right, yeah, danger zone. No worries, man. I think this might be a one-time. I think this might be a one-time thing because even I'm kind of bored. Not really, but if there's no payoff, then I don't need to be doing this live per se. All right, so we're gonna undo everything we just did. We're gonna copy that. We're gonna go back to VS Code. We're gonna delete that cell. We're going to delete this cell. We're going to bring this on in. And we should probably break this before we iterate through. No, because that's going to want to print that. So let's do this again. Yeah, let's just go ahead and run it. Let's run the whole cell. No. All right. All right, this is very close. This is really close. Actually, this isn't a bad idea. This actually might not be a bad idea. But this isn't what I wanted. This is all of. Okay. Okay, so it's showing each year by color. And it's showing where we're at for each year. Okay. Yeah, I'll live with this for now, I think. At least in terms of a chart. I was thinking having each like it is down here, but then these are just different colors. But this gets effectively the same thing accomplished at this point. So deposits by year 2024 March. Were March deposits that flat? Must have been. We had a very strong January though. Okay. Let's see what our deposits table is up to. What I want to do now is oh, look at that. It actually added a color. That's funny. Okay, it actually added a color. We're going to go create a new column that compares the current month's deposit with the previous year, but same month's deposit from the prior year. Shift 12. We'll call that year over year growth. Let's see what that table shows. Oh, I'm like, why? This makes, okay. Like this, I forgot that my daily Treasury statement cut off, and I think I said this. It's like a month old now, and so it must have cut off mid-March. So you know what I should do is I'm going to go back to the daily Treasury statement now, and I'm actually going to download the newest CSV file. So it's actually pulling in the newest CSV file. And you know what I just did? I did 5 years, but I don't want 5 years. I want the whole kit and caboodle. So I'm going to cancel this down. I'm going to cancel both of them, make sure all is selected, and then we're going to do that. AI Amazon kills just walkout shopping tech. It never really worked. AI checkout was actually powered by 1,000 people. I saw that headline. That was seems about right. Yeah, seems about right. Well, we're not getting a download to occur. Oh, there we go. Just as I hit close, it's downloading slow. There we go. All right, file is finished. So give me a second to open that file up. We will extract it, and then we'll open the directory that our code is in, and we'll reveal in File Explorer. We'll update this file, and we'll rerun the code to this point. See what we got. See what we got here. Yeah, there we go. We're getting the up-to-date data in. Now, there we go. This makes a lot more sense because now we're showing a little bit of April and we have the completeness of March. I should have caught it at that point. What do we care about now? We're going to go ahead and redefine our year-over-year growth. And now we can get a proper year-over-year growth for taxes. How should I do this? I guess let's do, was it dot tail, right? Go to the last 24. So what this is showing us is we had a lot of tax growth at the beginning of the year. You know what? Let's do this. Plot the year-over-year growth column. It's gonna collapse in April. Plot year-over-year growth column as a line chart. I don't think we need this variable because it doesn't exist. So just I guess ignore the end there. I don't know how helpful this is. I guess I'd have to correlate it with I'd have to overlay it with where we're actually at currently. Let me pull this back up. Let's see. We're curling higher here. This is quarterly. Quarterly ends at the end of 2023. And ours is from 2019 until today. All right. Interesting. A little too noisy, though, I think. A little too noisy for my take. I think the other thing, too, that might need to be brought into consideration here is the fact that not every month has as many And again, this is part of the noise. Is not every month has as many equal amount of days, and that's going to throw it off. So I think my next option is to start to add just 2 monthly receipts. What I mean by that is this is federal government current tax receipts by quarter. So, but then again, I'm doing deposits, not tax receipts. So I would need to, if I'm going to do apples to apples here and actually just add to this, I would need to just isolate just the taxes and not need to isolate just the taxes and not all of deposits. That would take some time. I don't know if I'm ready for that, but I think, okay, we got something accomplished. We got something accomplished. We found out what we don't want to do. I think the year-over-year growth idea is okay. I think the year-over-year growth idea is okay. However, I think it's too noisy. And I also think that what I really, really want is something more akin to a flow, as opposed to something more akin to a flow, as opposed to give me 1 second. As opposed to just the change. I mean, I guess this is kind of getting out of flow, the year-over-year change. But as we can see printed out here, it's just a little too chaotic. So how could we do this? I guess we could import. People are still watching. I guess I can. I mean, chat's kind of died down, but people are still watching. So if you guys are enjoying this, hit the like button. I don't know, you probably already have. Or just let me know in chat if you guys want me to keep going, and we can see if we can't crack this. I'm just going to keep going. I'm going to keep going. What the hell? I already set aside this time. Yeah. 100%. Give the heart. I appreciate it. Is this helpful? I mean, I guess what I'm hoping is, like I said, admittedly, I'm not a developer, so my code is not going to be elegant, but I do feel like I hope that at least me thinking through my thoughts and how it is that I'm trying to manipulate this data from a data science standpoint is constructive. All right, we're going to go back to ChatGPT now, and we're going to say, all right, shifting focus a bit here. I would like to pull in the following series from the Fred. You guys probably can't see what I'm typing here. We'll zoom in on this. And we'll grab that series. And I will go back to ChatGPT now. I am using the Fred API, make it a data frame. It is quarterly data, but I would like to interpolate it we'll just do monthly. Please write me this code. All right, let's see what it did, and then if you're playing along at home, I already have my API key set up as a environment key, so yeah, that's just the kind of the way that it is. And we'll see what data frame it spits out. Plot DF value. We'll see what this actually did. Oh yeah, we're rolling. All right. Okay, what is this reporting? And we gotta get this right. So, oh, you guys didn't see that. We're rolling. I'm sorry, you didn't see that. I forgot to switch over to the code view. We got the code done, and then here it is. Here's the chart. So we're good to go there, and that is representing what we thought it would. Now we're going to go back to ChatGPT and say that, all right, the first thing we got to let it know is I would like to combine my month totals that I made from the daily Treasury statement that are in the monthly deposits data frame to the end of the new DF that we just made. Oh, when I interpolated it, what did I do? I used a linear interpolation. Okay. So that means I can continue to add monthly from here, I believe. Yeah. Let's see. What I need to do now is tell it that the series from Fred data was billions of dollars, and my daily Treasury statement data from is in millions of dollars. Please make sure you account for this and make them the same. All right, to ensure, to combine the monthly totals from your monthly deposit and Fred data series, you have interpolated values. You need to ensure both data frame have common format and index by date. Convert the scales of the two. Join the data frames on their date index. You could accomplish this as follows. I don't think this is going to work. So what I think I need to do is say, this is my current code, and here's the last output of my table. So give me a second to do that real quick. You guys can't see this, but I'm going to paste this in just a second. All right. If this will work, here is my arc or not, but for more context, here's my current code. And here is the current output for monthly deposits. And I will paste that table in there. I want to bring in the deposit column to the new DF. Danger zone, danger zone. Ask a question, man. I can do two things at once. I can do two things at once. I promise you the payoff won't be boring if we can get this to work. If we can get this to work, the payoff will be worth it. All right, this looks a lot better. This looks a lot better. All right, we're going to switch back over to VS Code now. And put this in. We'll do this kind of chunk by chunk. Now we should be able to combine into the data frame. Let's deposits in millions. So that ain't working. That is it's not what we wanted. Not what we wanted. Well, you know what? I mean, here's the thing. This is going to get frustrating to do on chat, to be quite honest, or on stream. I think what I'm gonna attempt to do, and we'll do this off stream here. I know you guys are all still hanging in there, and you want the payoff. I just don't know if I'm cut out for this. So I think the end game is going to be I'm going to look to essentially continue to add the deposits to the end of the current tax receipts and get a more real-time view from the daily Treasury statements. But it looks like I'm going to have to hack away at it a bit. The idea is I think we can just continue to build out this time series right here. But I got to be honest. I guess I'm just not my expertise is not coding, and I think doing something on stream that is not your expertise is turning out to be a little harder than I thought. So I think when I do come back with code, I can walk through some ideas. But I don't think I'm going to be able to troubleshoot live, despite that in my head maybe thinking I am. Hopefully you get the gist of the idea. In terms of what I was going for, right? Because this finishes off Q3 2023, and obviously we have now a full quarter in of tax receipts that we'll be able to see, and I think we can get this a lot more real time. And then when we do this percent change from a year ago, we should start to see this acceleration in real time. And speaking of which, actually, speaking of acceleration, one of the things that I think I pointed this out the other night, the H.8 bank credit data is really starting to take off in terms of percent percent change. So we're really starting to see acceleration here in the credit cycle. And again, there were so many people like looking at M2, looking at bank credit, at the end of last year, middle of last year. Oh, we're going negative. We've never gone negative and not had a recession and all that sort of stuff. Right? Is that M2, I think, was showing the same thing because they're effectively the same. Yeah, we've never been this negative before, yada, yada, yada. And, I mean, here we are, no recession in sight and starting to reaccelerate once again. So bank credit starting to accelerate. And I would say the way that I'm seeing this is we're starting off the next credit cycle. And these credit cycles can last for a while. I think we're very much on the way to at least another year and a half, maybe 2 years of overall continued growth based on that. So the way that we would know in real time is those tax receipts. So I will hack away at that offline and continue to build. But I think in real time, chat, I just figured out that it's going to be hard for me to hack away at code while we are live. Before I go off air, I think maybe what we can do is we can scroll some Twitter together. What do you guys think about that? See if anything's really catching my eye at all. I think what I'm going to do is I'm actually going to start well markets or scroll down, and not go to the newest because usually the best tweets come during the market day. We got a lot of gold bugs. Happy about gold here. Happy that gold moved higher. Again, no surprise. Gold may be sniffing out a meaningful shift in monetary policy. Yeah, very well may be. Actually, okay, I'm going to give it to the long view here. That might be a worthwhile point here, and I've kind of made this point, but in a slightly different way. But I think sometimes gold can show us something ahead of time, in terms of where the credit cycle is at. So yeah, maybe it is. What do we got? We got my tweet. Very good tweet. I'm going to pat myself on the back. Oh, good. The earthquake's not going to disrupt anything for chips, so that's good. My 5090, when it finally comes out, I'll be able to buy without disruption. Do we got any good tweets? Any good tweets today, chat, that I should be pulling up? Pretty boring day, all in all, I guess. I'd love to hear from others, including non-believers. I remember the Book of Job was very popular, but this guy talks to me, Aaron, all the time. Seems very engaged. Favorite parts of the Bible. I'm going way off topic. The coolest story in the Bible is the story of Phineas. Coolest story. Badass. All right, I didn't see much on Twitter today to even tag, and I'm not seeing much pop up here. A lot of gold happiness. So chat, unless there's anything you want me to bring up, I think I've hit the high points for tonight, and I think we might be wrapping it up here. What do we got? We do have next Monday is what up, Teddy Brewski? It's never too soon or too late for MMT to take a victory lap. Always right on time. We've been crushing it, man. Crushing it. Yeah. I mean the whole the credit cycle kicking off again. I mean, the whole bit. Absolutely. Doug needs a tweet hit. Yeah. just looking for something good. No one's some of the stuff I'm just not interested in. I don't care about. Yeah, I think that's what I've got for tonight. I think I might end it there. Although I'm seeing people start to pile in again on the stream. I want to give you guys what you want. I think what I'm going to do, here's what I'm going to do, chat. I'm going to go back to the drawing board. Not go back to the drawing board. I'm going to finish the code. We'll go over the results on Friday. we'll have a Maury Povich moment on Friday. Big reveal on Friday. And I'll come up. I'll show what I came up with regards to the taxes, and we'll try and get that correlation built. And then we'll also do some data science on it as well, right? Maybe we can run some data science tests. Artists can only work in solitude, right? Yeah, I was really hoping I could get a good flow going, but I just it's in the back of my head that I need to be talking, and yeah, I just couldn't pull it off. So we'll bring it back. I have no problem. I mean, once I get it done, I can go over all the steps that I took and kind of go over the struggle. But I think that's where I'm at for tonight. So chat, unless you guys get any other questions, anything you want me to hit, I'll give it another 30 seconds or so. Otherwise, I think I will be wrapping it up for tonight's stream. Probably won't be on tomorrow. I'll probably try and do a Friday stream. And then we'll go ahead and go from there if y'all are good with that. And I'll hopefully, if all goes well, I'll have that. I'll have the Twitch account set up as well, and then flowing. So if you guys want to keep hanging out as I game, we can do that. Hamel Bijou probably will not be back on soon. He's been, I think he's offline for the time being. All right, chat. I'm gonna wrap it up here. Then, here nothing else. I will make sure and carve out that Monday for Adam and and I'd like to get Ryan on as well. Maybe we can carve out a time for the three of us to chat. And I know they have different takes and different views and track a few different things, so it might be helpful for them as well. But chat's been another good stream. Like I said, I'll probably be back on Friday, and we can go over everything at that point in terms of where we're at with taxes and all that good stuff. So yeah. In the meantime, good talking, everyone, and we'll catch you next time. So until then, good trading. We'll see you then. You have a good night, chat.